Greetings, members, one and all of the Salivation Nation. Silver reaches $30 an ounce, but this is even bigger news. Let's explore. Every Sunday night, I do a market watch where we pay attention to the markets as they open up in Asia. The precious metal prices move first in Hong Kong in Asia, then in London the markets open up, and then finally in the United States in New York they open up. All three markets have opened up and silver is up this morning to over $30 an ounce. When we saw that action move in the markets for a brief amount of time to $30, and then it kind of scaled back somewhat. And the price movement was somewhat lackluster considering the hype and hysteria around the silver short squeeze that really we are still under right now. That has manifested itself into a physical bullion sales increasing dramatically to the point where bullion dealers have shut down sales of silver across the board, and they're now back up selling again with much higher premiums. But the bigger news is not that price movement going up above $30, and many of us thought it would be higher than that. But what is the bigger news is the increase in the spread between bid and ask price for the spot price. And for those who don't know what that is, before we explain what happened during that live stream and the increase in the spread, let's talk about a little bit what the bid and ask price is. It's the difference between the prices that are quoted for those who want to sell a certain entity, in this case silver, and those who want to buy it back, and that's what's referred to as the bid price. In other words, it's a difference between the price between the highest price that a buyer is willing to pay for an asset and the lowest price for which a seller is willing to sell it. And so that is the difference between those two. And normally, the higher the spread, the less liquidity in the market for that asset. That's crucial to understand. I alluded to that essentially in the live stream where we witnessed this happen in real time. So what had occurred, and this is the newsworthy aspect of this, and I think this is bigger, than the fact that silver went to $30 an ounce. And that is that usually the bid and ask spread is typically a dime. That's 10 cents difference between the bid and ask price. And again, understanding that when you buy an ounce of silver from a bullion dealer, you are buying it based off the ask price. When you go to sell it to a bullion dealer, you are selling it based off of the bid price, which is lower. It means they're going to get more. It's a bigger spread. And usually that spread for silver is a dime, 10 cents. Now it is $1. So during the course of the live stream, we saw silver increase that spread 90 cents, and it was something to see. And that spread remains in effect as of the recording of this video. And silver is the ask price is now above $30, but the bid price is below $30. And this is, I think, quite telling as to what we're going to be seeing in the next week or maybe longer. We're seeing premiums dramatically increase as of the recording of this video for any silver you want to buy anywhere. And we saw that happen in March of 2020 as well, but it is certainly exaggerated and to a greater degree now. What happened last night and yesterday in the markets, Sunday, January 31st, was unprecedented. I posted a video earlier about APMEX releasing a statement as to why they did it, and more than likely that is why other bullion dealers did it as well. They stopped the sale of all silver especially the coin that you see before you here, the Silver Eagle. Now, you can buy them again, but they are going to be for quite a hefty premium. And people are concerned about selling their silver if the price spikes up dramatically. And that is the other newsworthy aspect of this situation, is that silver's price move upwards means that it may be much more difficult to liquidate your silver. And that spread between bid and ask is illustrating that concern that many people had. And that was a common thing expressed in the comment sections of my videos and on the live stream, is how do you sell silver if it gets to $50 an ounce or $75 an ounce? Will bullion dealers or local coin shops pay you spot price for silver? And how is it going to be resold? It's going to be a riskier thing to hold on to silver that's bought at $50 an ounce, with the likelihood that the price may just come crashing down. Smaller coin shops and smaller bullion dealers don't want to be held with that kind of liability in their possession. And so therefore, it can be very difficult to liquidate silver if the price spikes up to that level. Now, there's a chance, if there's an increased and consistent demand for silver, that some bullion dealers may pay you above spot price. So if it's $50 an ounce and they're seeing a steady flow of demand for silver and they're running out of it, and they can move it very quickly, I know my local coin shop, they will have buyers in hand before they even see the silver that they buy. It moves that quick. And so they may give you, $3-4 over spot for generic rounds if that's the case. I think that's fairly unlikely at this point. I think most everyone, especially those that are in the world of selling and buying gold and silver, understand that this is certainly a very much a hype situation, and more than likely will work itself out during the course of some time. How long, though, will it take? Premiums are rising. Physical silver is in demand. This is normally a good thing. I've even expressed as such in one of my first videos about this short squeeze that we're seeing last week. And that is, for it to really count, there needs to be physical demand for silver. And we're seeing it now. It's just the understanding of what you're buying for those who are buying it in the physical form. Do these Reddit people or Wall Street Bets people and those who are out there to send a message to the hedge fund managers, do they understand what they're buying? Do they understand what silver is about? Do they understand that silver is not about getting rich or sending a message, really, other than the fact that you are, in a sense, freeing yourself from the financial institutions? It's a message that has to be sent for a long course of time, not just a few weeks, or based off of one motive here to send a message to the hedge fund managers and the Wall Street gurus and the like. This is something that you do for the long term. Silver is best taken advantage of when it is unloved. There was a time where there was a lot of distress over silver and uncertainty when silver was trading regularly for $14 an ounce. And you could buy silver spot deals. A lot of these bullion dealers had silver spot deals where you buy 10 ounces of silver at spot. And it was not uncommon to see generic silver rounds for under $1 over spot on a regular basis. All of those days are long since gone now. That was the time to buy silver, and to buy a lot of it, to, quote, back up the truck. But a lot of people had lost faith in silver because it was consistently down for such a long period of time. And those people were very impatient, because I remember during the early 2000s and mid to late 90s, when silver regularly was hovering around the $4-5 range. It wasn't doing much of anything for years and years and years. And that was really the time to get in on silver. And I did to a point, but even I didn't fully understand what I was doing. In retrospect, I'm glad I did buy silver at that time period. We'll never see those times again, $4 and $5 silver. In fact, I don't think we'll ever see sub $20 silver again now after what we're seeing not only last year, but also this year. Of course, I could be wrong about that. We're not too far removed from $20 silver, but I think that there is some lessons that are learned here, and I am slightly optimistic, maybe even more so than I was yesterday, that some of these new buyers of silver may actually see the appeal to it and really study it and understand why they're doing it, and they may hold on to it. There's a lot to learn about silver. There's a lot to know about silver. So, but that is the news, and this could be a concern, and it could really turn off a lot of people as well to silver, and that is a great concern. And this is why this is bigger news, that the spread between bid and ask is widened now for silver. And I think there's going to be repercussions of that and trouble with liquidity. And I'll give you one other example of that liquidity problem. If you go and search my channel in my videos for rhodium, you will see I talk about that spread between bid and ask price. The most exaggerated form of it is rhodium. There's a $2,000 spread between bid and ask price, with rhodium now trading at $19,800, almost $20,000 again. And that spread is the spread alone is more than the spot price for gold, which is quite telling for sure of how illiquid rhodium is. In fact, if I was to try to sell a rhodium bar, I would be fortunate to get bid price for it. Likely, it would be below bid price. And silver's widening spread between bid and ask price is something to pay attention to. Will it widen even more? Could it narrow some? Could it come back to reality? But the fact that we saw this on a live stream about to see if silver would explode in price before our very eyes was quite interesting and fascinating to witness that activity. And so there you have it. But that is bigger news, and I think that is going to really set the stage for what this silver squeeze and how it will play out in the coming week or weeks ahead. So there you have it. Hope you found this video useful. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.